Hi there, Serial Trader here. Let's have a look at the major U.S. indices as of last week's price action. Uh, so looking at this, we definitely appear to have a wave 4 bounce in place. Looks like we're still continuing to head down in what is likely going to be wave 5. And you just see we're still rejecting. We had a little bounce up on Friday, but still rejected the previous day's high and also clearly rejected the T line and closed down, or basically down to flat. I think it was 1 point down or something like that for the day, but rejected huge amount of those days gains intraday and actually closed slightly down. So the downtrend still appears to be in progress, still appears to be respecting the T line as resistance, just as in an uptrend it largely respects the T line as support. So until you see something change, like bullish engulfing candlestick and a close above the T line, there's really nothing to get excited about as far as trying to catch an upward bounce. The path of least resistance, just going off the charts here, still appears to be to the downside, and we have this incomplete, what looks to be a 5-wave structure in progress. So we need that wave 5 down. We need to challenge and likely break below this wave 3 low. And how far could we go? Well, the 1.32 objective of this wave 4 bounce, so the reverse fib of that, gets us down to 2669.85. So that's minimal. And if we get a little more bearish, around that 2600 mark, 2604. So still looking at those as possible levels for targets there. But so far so good. The bearish trade is working. Looking at the futures, just let me get to the 1 hour chart of the futures here, or maybe 15-minute. Yeah, that should be okay. So yeah, as far as the futures go, I have tightened my stop up at this point. So we had this most recent 3-wave advance on the futures, and I believe the high there was at 2850. And then we had another spill down. And if you go in closer, we had another 3-wave advance, and then another spill down. And now overnight, looks like we're having another little bounce up, although it'll likely just be a corrective bounce. At least so far, it's looking that way. Looking on the 5-minute price chart, looks like we have potentially just let me get the labeling tool out. Potentially ABC up, something like this. I have the equality relationship illustrated between potential A and C there. And then it would be ideal if it fails around there and fails below this most recent 3-wave corrective high, which was at 2778.50. So yeah, if we fail here, come down, break out this little channel that we're in on the 5-minute chart, that should just lead to another leg down of selling. So I'm watching that right now. Let's see here. Go to the hourly chart there. But yeah, you can see it looks like we're still heading down. I mean, we broke down clearly out of this channel. And then we had another channel on this shorter time frame, broke down out of that, and now we're just bouncing again. So just a series of lower lows and lower highs, and until that changes materially and we get a strong daily candlestick signal and a close above the daily T line, I just don't see any reason to be looking for a overly bullish trade. It'll come. Going back to this daily chart of SPX, once we get our 5th wave down and it counts as complete, and then at that point we'll likely have a bullish divergence. So we'll likely make a new low in price in this case, and RSI won't make a new low because it got very low in the wave 3 spike down there. It got down to 17 here. So if we make a higher low in RSI, a lower low in price, and then start coming back up, that should be a pretty good entry for a bounce. And then we'd likely have a proportional ABC up for a wave 2 or a wave B. So that'd be a considerable move up from those levels, and that's certainly worth playing. It'd be a large enough degree corrective wave up that it'd be worth trying to position for. But right now, still focusing from a trading perspective to the downside here until there's a reason not to. Now I was going to go back to the futures one more time. And okay, so going into the weekend, I closed most of my futures positions I was holding overnight. I think I just have a couple contracts that I'm swinging over the weekend. I put the stop on those to this most recent significant pivot high here, and it was just above 2,800. I think 2,875 is what I put it at. So just a quarter, a quarter above the high here on this 1 hour chart. So as long as that holds, it'll just keep trending down. I'll probably be doing larger position sizes intraday, as is my habit. I also closed. I'll go the thinkorswim candlestick chart here. We go through these charts, but I also closed some of the SPY puts that I was holding, as they did nice. Made some good gains, but I also held some over, so a bit of a compromise. Didn't want to be too heavy over the weekend, but still fairly confidently bearish here, just going off the chart. So I held some. Still holding the VIX calls. So still definitely positioned for this, and I'll be looking on any kind of corrective looking bounces, starting tomorrow, Monday, to again reposition heavier for some downside action. But always good to take some profits along the way, and then you can always reposition. It's never going to be straight down or straight up, regardless of the trend being up or down. It's always going to give you chances to reload and take profits, etc. It really depends on what you're trying to do, but I like to just combine intraday with swing and position and everything. But that being said, let's look at the candlestick chart here on thinkorswim SPX. So yeah, definitely 5-wave decline in progress. Looks like we have our pivot up here. Now you see how nice we were rejecting the daily T line and this long upper shadow on Friday's candlestick. We really tried to bounce up there, but you can see it's just getting sold right down. And yes, it actually closed down 1 point despite having such a positive day at 1 point there. So clearly finding resistance on that daily T line, actually still closing below the 3T line. The 3T line is still well below the T line. We're
market data connection lost.
Basically sitting right on the, hang on there. Basically sitting right on this 200-day simple moving average, and I do expect that to give away in short order. But then again, once we get our wave down below this low, and we start having that bullish divergence on some indicators and oscillators, be looking for a strong bounce to play there. But right now, still focusing down. So on the weekly chart, let's see if there's anything interesting going on the weekly candlestick chart for SPX. So yeah, we had that bearish engulfing weekly, great follow through last week. Great follow through after the week after, and then last week we had a bit of a bounce attempt, you can see, but then largely rejecting those higher prices. In fact, just finding resistance on this weekly 3T line. So we're well below the weekly T line. The weekly 3T line is crossed well below the weekly T line, and we're just closing below both of those. Finding some at least temporary support here on this 50-week simple moving average. But as you can see, the weekly oscillator nowhere near oversold, and if you just look at the previous level it got to back here on this pivot, it just looks like there's further room to run before we're truly oversold here, going off this weekly oscillator. So definitely a weak candlestick, large upper shadow, rejecting higher prices. Bit of a doji week. Not a lot of price change on a closing basis, as you can see there. We should get some more clarity this week, and definitely favoring bearish continuation, at least short term here, to make this wave 5 down. All right, that's SPX. So let's go over to the Dow Jones Industrial Average. See if there's anything compelling going on there. So the Dow also finding nice resistance on this daily T line. Long upper shadow rejecting the T line there as of Friday. Closed below the 3T line, and 3T line is below the T line. So very much in alignment with the S&P there. Weekly candlestick on the Dow, anything interesting here? Let's have a look. No, basically the same idea as SPX, just kind of a weekly doji, just a pause in the downtrend that's in progress. So that's pretty good for the Dow. Go with the NASDAQ composite. And Oh yeah, NASDAQ comps is definitely looking the weakest here. So NASDAQ, as of Friday, actually made a new intraday and closing low below Thursday's low, which the other two indices did not. And closed well below its 200-day simple moving average as well, which again the other indices did not as of Friday. So tech definitely leading to the downside, and you can see a nice rejection of the daily T line on the NASDAQ here as well, and closing well below the 3 T line and the T line. So very much positioned for further downside here. And once the NASDAQ makes a wave 5 low below the wave 3 low here, and we start getting those divergences, start coming back up, the NASDAQ should have a strong bounce. Should be very much in alignment with what I was showing on the SPX there. So, yeah, we might be able to challenge around that 7,000 level on the NASDAQ composite in this wave down, maybe below that even if we get really bearish. Let's see if there's anything weekly on the candlesticks here for NASDAQ. No, it's similar, just as basically long upper shadow rejecting the higher prices last week. Still a lower weekly close than the previous week. So on a closing basis, still weaker. Well below the weekly T line and 3 T line. 3 T lines cross below the T line. And we're not oversold yet on this weekly oscillator, still heading down. So very much lined up for further downside on the NASDAQ. All right, that's also sitting on the 50-week simple moving average, much like SPX there. So everything's looking pretty correlated and similar here. It's good when you don't have mixed messages. It makes the forecasting a little more high confidence. And yeah, I'm still liking the downside here until the market gives me a reason not to. Now that's good for the NASDAQ. So let's look at the VIX. And okay, VIX as of Friday. So VIX definitely made a higher low last week there, I believe on Wednesday. We had a nice move up on VIX on Thursday. And then Friday, not much changing. Decent intraday range on VIX, but slightly lower close than what we had on Thursday. But VIX appears to have found kind of a near-term higher low, and it looks like we're attempting to make a higher high. So we'll keep an eye on VIX. If VIX really starts spiking up, we could get a more violent fifth wave down in the indices. Maybe exceed some of those targets, but we'll have to see. So that's VIX, and that's probably good for now. Check in again during the week sometime. All right, Serial Trader signing off.